Investing in dividend-paying stocks. What is a dividend? Hey, I'm Michael, and we talk about investing and personal finance. If you like what you see, click the like button, subscribe, and you can follow me on Instagram as well. Yeah, today's topic, it's quite an interesting topic. So investing in dividend-paying stocks. I think that's one of the things why the stock markets exist in general. The idea behind the stock market is that you invest in a company, you buy a part of a company, and you would like to see the company be successful, and you would like to receive some earnings back. So I guess dividend is one of the things that is really interesting for investors and something where you can see how the company is doing and how to receive money back from your investment. But let's get into the presentation so we can have a look at it in a little bit more detail. So I looked on Wikipedia. What is a dividend? A dividend is a payment made by a corporation to its shareholders, to the people that own parts of the company, usually as a distribution of their profits. And it says usually because if a company doesn't make a profit, they could pay out the dividend anyway, but it would not be a smart move because long term they would not survive. Would not survive that at all. And the ratio for a payout of the earnings for a healthy company should be in between 60 to 80% of the earnings that a company has. It can be lower, it can be higher. It's really depending on the company and what they want to achieve. Younger companies usually have either no dividend or pay no dividend, or just a really tiny dividend so that they can reinvest their earnings for future potential growth. And that brings me up to the next slide. That's quite a great image that I found online on the tradingacademy.com. So credit to them for creating such a great little image. And it shows the dividend VS growth investing. And you basically have three different areas there. One is where you invest in companies that just grow their share value, but they don't pay out any dividends. So you do not get any cash back and you don't have any cash flow generated when you invest in those companies. The other quadrant is, or the other part is cash flow investing, but no growth. So there are companies out there that pay quite a good dividend and they actually have good earnings, but they are not able anymore to grow their share value and their share price. An example could be Shell. Over the last years, the share price was very stable and kind of leveled on a specific level, but their dividend payout ratio is actually quite high. So you basically get your return through the dividends. And an example for the top one could be Facebook, for example. They don't pay a dividend at all. But if you look at their share price, that grow quite significantly over the last years. And then the other one is a company that does both, where the company is still growing, probably at a slower rate as the top one, but on top of that, they are paying out a dividend already. And I would assume, or I would say, this is one of that's the sweet spot of investing. But either all the two other categories can certainly have a benefit at all as well. And an example for the last section could be Visa or MasterCard. They do pay out a dividend, and the dividend is constantly growing, which is great to see. But the paid out dividend is actually low compared to some other companies. And Apple could be another example as well. They started to introduce a dividend payment a couple of years ago, and that's constantly growing with the value of the company as well. So why could dividend investing be a smart move? So I'd say a company cannot really lie when they have to present their earnings, and connected to that is obviously the dividend payout. So I think that is actually a really good indicator of how the company is doing. If they make earnings, they can pay out dividends, and if they don't have any earnings, they probably shouldn't pay out any dividends. So you can see what the earnings were, and that's why I think it is dividends. Companies that pay out dividends are usually quite mature and are very stable. And you can not just get a dividend from companies, but also can receive dividend from ETF. And of course, as from my previous video, what is an ETF? You saw that an ETF basically is a basket of different companies. And so if an ETF is paying out dividends, this is basically the dividend from all the companies within that basket, which is really good. And ETFs usually pay out their dividend quarterly. And for companies, that can be quite different, but we see that on one of the next slides. So as I just said, the payout of a dividend can be in different intervals. It can be yearly, which is very common in Germany. It can be half yearly, which is most common here in Australia. It can be quarterly, which is, I'd say, the typical one in US. But in US, there are also some companies that actually pay out their dividend on a monthly basis. And there's a company that actually has a name associated to that. It's called the monthly dividend company. And so you basically receive money back of your investment every month. But it really doesn't matter how often they pay out. It's always the percentage of the earnings of the entire year. So an average of a dividend is somewhere between 3 to 5% for higher paying companies, or 1 to 3% for companies that don't pay out that much dividend payment per year. And there are two ways of receiving dividends. Either you can get them paid out, as I just said, or you can get reinvested dividends. And you can either reinvest them yourself, which you definitely should do if you are an investor, or you can sign up for a dividend reinvesting plan. So for a DRIP plan, some companies do offer that. So every time when they would pay out a dividend, you can decide to actually get more shares for that amount of dividend. But I've marked the compounding interest green here on that slide, because I wanted to point out how important it is. And we can see that on my next slide as well. I prepared a graph where you can see how important it is and what impact it has if you reinvest your dividends. Over the first couple of years, you probably don't really see a difference, but when you then reinvest your dividends on a longer term, you see that it really significantly go up that curve. And that is because you receive interest on your interest. So on your dividend, you basically receive, again, dividend. So that's called compounding interest. And if you invest for the long term, which you should, then this will definitely pay out. And it's quite impressive to see how explosive the growth is in the last years of your investments. And before I go to the market update, once again, dividend investing is a big part. You should not only focus on the percentage of dividend a company is paying, but it certainly should be a very big part of your investment journey, and it can be really interesting to see. For myself, I do both. I'll pick companies that pay out a dividend, but also companies that are more focused on growth. And I think the mix is actually quite good. Is quite good to do. Let's go to the market updates before I continue struggling. I cannot stop looking at the share price from Tesla. What was going on there over the last couple of weeks? The Tesla share price went basically through the roof. Over the last 6 months, the share price grew over 200%. It actually was over $900 just 10 days ago, I think, or a week ago. And now it has settled a little bit at around 770 USD. It closed yesterday at 767.29 US dollar. So that is what a significant growth over the last 6 months. And Tesla is obviously such an interesting company. It's one of the biggest electrical car manufacturer, and certainly one of the most modern electrical car manufacturer. Even though all the other bigger brands are catching up, it still feels like that Tesla is that one step ahead. And the value of Tesla share and the entire company is at the moment more than, I think, Volkswagen and GM or Ford together. There you can see that the value is actually quite high. And in my opinion, it's at the moment at a level that is too high for what the company actually represents. When you see that the output of cars is much lower than from all the established brands. But here we go. That's what the share market is about as well. And it is still really interesting to see what potential some companies can have over the long term. And yeah, talking about a share that went through the roof, the share market obviously does not want to go lower either. So we had a bit of a break over the last couple of days, but the share market across the world are hitting their all-time highs again, with all major indices finishing in the green over the last couple of days and basically on their all-time highs over the last 2 days. It's incredible to see, and I hope it goes or it continues to grow. But as always, there will be times where the share market goes down, but the majority of the time it will go up. And to the category, what I'm watching on YouTube. And I'm actually really excited to talk about Tracy Edwards here, because she's a YouTuber since 2 years now and a former author. So she already published books about finance and personal or investing and personal finance. But over the last 2 years, she's publishing YouTube videos on a weekly basis. And she is all about dividend investing, which is really incredible to see. So she created herself quite a large dividend portfolio, and she's living off her dividends. So she is living the dream that a lot of investors have, that you literally can retire and just live off the dividends that you receive. I mentioned in a video earlier that the FIRE movement is quite a big movement in the US, which is very similar to what she's doing. She's tried to saving a lot of money and reinvest all the money into the share market and lives from the dividends. You can follow her on Instagram as well. She's publishing stories there very regularly. And another really cool thing, she's an Aussie investor channel as well. So really great to see her growing and how she's doing on YouTube. And looking at the last category, quite an interesting category and a very modern category as well. It's investment apps, and there are quite a lot of investment apps out there by now, and it started all in the US once again with companies popping up where you could use your smartphone and just your smartphone for investing, and they actually come with a couple of benefits. So a lot of those companies try to obviously have an advantage towards other brokers, and one of the advantages is obviously cost, because they try to offer very low cost investing. And in the US, they are even able to offer investing for free. So the apps WeBull, Robinhood, and M1 Finance are US-based companies, so you can invest from the US and can invest in stocks, and you can actually buy shares and buy fractions of shares for free. In Australia, it is a little bit more difficult because there are different regulations, but two companies managed to create a similar business model as well, and that's Spaceship Voyager or Spaceship and Raiz. And they are very similar. They are Raiz is investing in individual companies. They create basically their own ETF, and Spaceship is investing in ETF, and you can decide in what type of ETFs you want to invest. And Spaceship is free up until an investment of 5,000 Australian dollars, and Raiz, you have to pay a specific percentage for your investment. And in Germany, there are popping up some investing apps as well. And one of the most popular investing apps is Trade Republic, which is doing really well, and they offer free share trading as well. So you can buy shares for free in your portfolio, and I think they do offer fractional shares now too, but I'm not 100% sure, so don't nail me on that. Yeah. And this was the video of this week. It was really great to be live again. Looking forward to see you next week, and I see you then. Bye.